So, cryptocurrencies, Bitcoin, Ethereum, etc. have not had a good couple of months. While many expected a surge in price towards the end of 2021, instead, the market fell. And at the start of 2022, the outlook today doesn't look much brighter. So, is the latest cryptocurrency cycle over? Is the bear market about to return? Or will the price bounce back? In this video, we're going to answer these questions with the help of Raoul. We'll be hearing his 2022 crypto predictions, and I'll provide my analysis at the end. Hi and welcome back. My name is Tom Heavey. I hope you're doing well. Let's get straight into our first clip.
So what the hell is happening with the market right on these last months?
Yeah, I mean, it took me by surprise. My base case was that we were going to see the typical year-end rally. Obviously, most of us had the same idea. Usually when most of us have the same idea, it doesn't work. But the other thing I did know is, having come from that finance background, knowing how hedge funds and institutions work, I also knew that if you're a hedge fund and you've got crypto in your portfolio, you've probably had a good year. So to get paid, you tend to close out your portfolio. So you know what you're going to get paid at the end of the year. So they are incentivized to sell their positions, to go away for Christmas, have a break, that kind of stuff. The institutions like pension funds and others, they tend to rebalance their portfolio. So like Ethereum's up 500% this year. So if they started with a 1% weighting, they're now at a 5% weighting. So they'll probably bring it back down to, let's say, a 2% weighting in line with their allocation. So you've got institutional sellers that never really were in the market before. And they're not expressing, I don't think, a negative view of the market. What they're just doing is rebalancing for year end. And so my general view is that most of that selling is now done. And so the next thing they all come into January with is a new P&L. And, what do I do now? The only answer is I have to buy more.
So basically all this red wave this last week was like people selling, making some profits, and also rebalancing, you think?
Correct.
Okay, cool.
Correct. That's exactly what I think it is.
Jack Dorsey tweeted that we don't own Web3, like quoting the tweet, like, you don't own Web3, the VCs and their LPs do. You'll never escape their incentives. It's ultimately a centralized entity with a different label. Know what you're getting into. So my question for you is like, so based on this tweet, so he said like that Web3 is owned by a few venture capitalists, mostly the same guys, same story from Web2 with different characters. So what do you think about his point of view, and do you think it was a misleading generalization?
I think it is a misleading generalization. Yes, obviously, there's a lot of VCs who want to invest in Web3. But what is ownership in Web3? What is Web3 all about? It's about the community sharing in the economics of the network. Just because VCs have some share of, let's say, a holding company that is setting up a business doesn't give them ownership of the network. This is the difference. Facebook and Twitter, the ownership of the network was only with the shareholders and not the users. So it's a fundamental misunderstanding of what Web3 is all about. Web3 is the shared ownership of the network. That's how I think of it. So I get what he's saying. He's basically saying, well, Bitcoin didn't start backed by VCs, but I'm sorry, but stuff like Square, that, Strike, stuff like that, the layer 2 payment solution, well, there's venture capitalists in that. Capital needs to come from somewhere. It doesn't all come from individuals, and you're not allowed to raise initial token sales from individuals without breaching securities laws. So it's a bit disingenuous to talk about it in that way, and it's a bit misunderstanding about what Web3 is.
Yeah, internally, me and Gelf, we are discussing that maybe like we know that he's a Bitcoin maximalist, and maybe this can be interfere on his judgment in some way, right? That's
right. And there's nothing wrong with somebody focusing their attention on one particular area of this new revolution, the blockchain revolution, digital assets. But it doesn't have to be at detriment of everything else. That's crazy. It's not a zero-sum game.
Yeah,
but his idea is if we don't create sound money first, it's all lost.
Yeah.
Okay, that's his opinion, and good for it. Jack, go for it. Get people around you, build stuff, do stuff. But don't take away from other people doing other things in the digital asset space, because there are other people who are focused on specific things in DeFi or stable coins or interoperability, and they're all equally applicable. Let everybody focus on their bit. That's how distributed networks work. If we all focus on our bit, we've got a massive network of experts all focused on building out component parts of all of this.
You have said many times that crypto has a faster adoption than the internet by itself. And how many years do you think that crypto in general will be less volatile due to this mass adoption that's happening? If I'm not mistaken, you say it's about 113% a year. Is that right?
Yeah, I'm just going to look at my Bloomberg screen to see what the volatility of Amazon is. And that'll give us an idea of what a large adopted network, which is an exponential or logarithmic trend. So Bitcoin is roughly about 75% volatility. So it's a very volatile asset. Let's have a look. So I'm not sure I can't find it yet, but what we'll find is that over time, volatility falls as more people are in the network, because you don't have discrepancies between buyers and sellers that create illiquidity because there's more people in the network. So you'll tend to find, Amazon now is trading off call it a 30% volatility. So it's half that of Bitcoin. So I think, as Bitcoin or cryptocurrencies get to 1 billion users plus, what we'll find is that the volatility will fall. The prices become less exponential in nature, both to the upside and the downside. But it should remain in a logarithmic trend.
In how many years do you think this market will be less volatile, the crypto market?
Like 1 billion people, when we reach 1 billion people, it's due to the growth.
Well, 1 billion people, bizarrely, because of the compounding numbers, if it's growing 113% a year, you get there by 2024.
Wow.
Yeah, because I always see this day coming, I think, and I always see it foggy. I don't know if it will be like 2 years, in 5 years, or in 15 years. Well, I hope I will be alive.
Just use the adoption curve. Assume it slows a bit, because adoption always slows because the rate of change goes down when more people are in it, right? So it's easier to go from 1 person to 2 people. That's 100% growth than from 2 to 4. So just extrapolating the numbers, you get to 1 billion people by 2024. And that's by slowing the rate of growth down to 80%. And so you're at 3 billion, 3.5 billion by 2030.
Mm-hmm.
And I see emerging countries like Brazil getting mass adoption crypto. Like a good data for you is that Brazil has more crypto holders than people invest in the stock market, for example, which is kind of amazing, right? Due to this volatility, people are, no, I don't want to invest in crypto, but they're really adopting it. So it's fascinating.
Well, and also look at the holders of crypto. They're not the traditional holders of equities.
Yeah.
So here's a bunch of old people wagging their fingers saying, well, it's much more volatile. The younger people who own crypto like the volatility, because the volatility gives returns, risk reward, while the equity market gives less of that. So it's a whole change in risk appetite for the population.
Right. So our next 2 questions, I think they are already answered by our conversation in a natural way. So one was about a bit social tokens and how it impacts developing countries like us. I think we thought about it. If you want to add it, feel free.
Yeah, I mean, I think, look, it's an important factor that because this is borderless, you can be in Brazil and participate in Manchester United's economy.
Mm-hmm.
Right before that was impossible to do. What, you had to go and open a brokerage account in the UK to buy shares in Man United. What are you getting for that? It's not the same thing, right? So this is a big playing field leveler, i.e. it allows all sorts of people an opportunity. And because tokens can be fractionalized, you can all put in 5% of your net worth, whatever that is. So that helps adjust for the fact that let's say you're in Turkey now, your currency's collapsing, but you can still think of it in the right terms. Also, because these things are priced in different currencies, it gives people the opportunity to avoid devaluation of their own currencies.
Okay, so the first thing that jumps out on me is Raoul's prediction for this year. In the interview, he held his hands up and admitted he was wrong when he expected crypto to surge towards the end of last year. And the reason for this mistake most likely comes down to hedge funds taking profits and rebalancing. After all, crypto has outperformed most other markets so significantly in 2021 that some funds may have started the year with just a, say, 1% allocation and finished it with 5% towards crypto. In order to reduce their risk, they need to trim their positions. Raoul also touches on his predictions for this year and for the future. In the coming year, Raoul expects institutional adoption to continue growing as fund managers look to compete with each other and find an edge in the market, crypto being that edge. But for me, what I'm much more interested in is the long-term outlook. I've said it to you before, and I'll say it again. Nobody really knows what's going to happen in the market today, tomorrow, or on any short-term time horizon. On the long term is the development of Web3. Now, Raoul notes how, yes, Web3 might be heavily funded by VC investors. Unfortunately, this is just always going to be a reality that we can't escape. But what matters most is the network itself is owned by the users. Now, what exactly does that mean? Well, let's imagine you created a decentralized Uber today. How would you get people to use it at the start? Sure, you could give people 50% discounts to the early users. That might work, but ownership of Uber will always remain with the shareholders. This is how Web 2 works. What if, instead of doing that, you said this: early users of new decentralized Uber, you get rewarded with shares. For every mile you ride as a passenger or a driver, you get one extra share. Now you have a system where the users of the network are also the shareholders. This is Web3, and it creates a very powerful incentive mechanism. It creates a community of users who feel valued, whereas us users in Web2, we generally feel exploited. So, in times like this, while everyone is freaking out, I'll tell you honestly, nobody knows what is going to happen in the market in the next few months. But as someone who first got into crypto about 5 years ago now, I can tell you that the future of this industry is extremely bright. There is no industry on the planet that I believe that will grow as quickly as crypto in the next 5 years. I can also guarantee there will be bumps along the way. But from my experience and from what I've seen, conviction pays off. Those who continue investing every single week or month through dollar cost averaging fare far better than 99% of those who don't. And it's easy to invest when things are going up, but the real money is made when you continue to invest the same amount and with the same frequency when things are not going so well. So those are my thoughts, and now I'm keen to hear yours. Do you agree with me and Raoul? Are you still investing in crypto? Let me know your thoughts in the comments below. Thank you for watching, and I will see you again very soon.